What's up, Bay? Well, we'll try to get that from happening this week, alright? Stopped out 3 times last week. Yeah, last week was a pretty volatile week. What is up, traders? My name is Heath and this is Trade Talk. If you are new to the channel, welcome. If you are not, welcome back. It is Sunday, so it is time to do the Forex Weekly Outlook. The Forex markets are open, and as you can see, they are continuing to the downside. Well, at least Aussie yen, that is. So this was the open. We never trade on the open of Sunday because if you take a little glance up here, you can see that the pip spread is 15 pips wide. So if you were to take an entry right now as to buy it, you would get filled, let's say roughly, well, not 41 pips away, but you get the gist up there. So this was a very volatile week. The Aussie yen does not move very far, very fast. It has a very small pip count. So for it to move 41 pips in a session is pretty fantastic. And last week you were getting 100 pip moves out of this thing. So let's see, I went short in here, and then by like 2 days later, we had already dropped over 100 pips. 75 pips, something like that. So yeah, when you get a rush of volatility in the markets, the Aussie yen can move quickly and swiftly to the downside. So let's go give us a little gander over here at pound dollar. Where are you, pound dollar? Where have I moved you to? Here we go. There's pound dollar opening up on a red week as well. Let's get rid of the drawings, or opening up to the downside as well. Right at support. Let's go look at the daily level. What is up, chat? What's up, YouTube? What's up, CTM? Glad you guys could be here. We're going to make it kind of a quick session this evening as I do have ribs on the Barbie. That's right. Going to eat some ribs for dinner. This is where you're finding support right now on the pound dollar. It was this last bearish closing candle. This move was a fake out. It was a fake out move to the downside, taking out this support level right there. The level is 1.38028. The level that was the fake out was 1.38410. You can see you got a daily close below that and then a bullish candle the very next day. This would have been looked at as a retest, all right, to the downside. The reason being is you have taken out market structure to the downside. The reason I was still bullish on this asset is because at the time we had a target right there. So that's what I was looking for. So I was looking for bullish targets to the upside. We got that out of a FOMC meeting. Not FOMC, apologies. It was a NFP meeting, non-farm payrolls. Boom, took out target, everything was good. So when this happened, this is called a bear trap. When you get a bear trap, you get enough people off sides, you can get explosive moves like this. Couple that in with a bearish NFP report coming out and a few other things, and boom shakalaka, explosive move to the upside. So that was a bear trap. We did a little session this morning for the YouTube members and Patreons, and basically what we talked about was traps. And the reason why is, if we go back over to Bitcoin just briefly, forget that. That's just I took a paper trade it this morning basically just to explain a few things, but we had a bull trap on Bitcoin right here. You got to close above resistance right there, but as soon as this candle took out this candle's low, you should have been looking to the short side, kinda, sorta, not really. It's one of those things in markets that just becomes a little bit difficult to understand. You're in a near-term downtrend, so looking for bullish entries in a near-term downtrend doesn't always play out. You are range bound as well. You have tested support on Bitcoin. This bearish candle right here, the close of that thing is what this day tested. And you can see you're getting a bullish move off of this. So I was just taking this for an example. So let's get this off of the thing so it's no longer in the way. So essentially Bitcoin's getting a bounce from down here. We would expect that as it is support. So what we're looking for on Bitcoin is a move up and possible failure. All right, look for failure at this level right here, 37,311. If you do not get failure here, then yay. right? Bitcoin may be heading for higher prices, but if you do fail here, the reason you're looking there is that was your last daily close before you took it out. You came back in as a test of support. Very next day, that is a failure of support. So you will see if that level wants to hold as resistance. So moving back over here to the FX, you can see that basically everything took a dive last week. So here's Aussie Swiss, not as drastic as a move as you got on Aussie Yen. This thing is chopping sideways for some reason. Swiss pairs like to do that a lot. So you can see that it just trades sideways for a long time, but you have broken down below support. This day just opened, so let's get rid of all this stuff. This day just opened, so this was test fail. This was support. So you have not, well, you did fail support Friday. Apologies. There's your failure candle, blasting through support, closing beneath it. Today you have opened up, you've already tested that level, you are already heading lower. It is the Asian session. It's not the Asian Open yet. The Asian Open comes around about 2.5 hours or so. So this could just be a fake out move. Like I said, you're not looking to enter any trades right now. Look at the spread, 25.1 pips on Aussie Swiss. My goodness. Let's just see where 25.1 pips would put you had you entered a short position right now. Yeah, pretty close to 68611. Don't trade the open of the Forex market if you have a spread account. If you have an ECN account, that's different. All right. It's a sunny Monday morning here in Aussie. Welcome, Matt McSweeney. Thank you for showing up, my friend. What is up, everybody? Hello, dude, says KF. Hello, dude. Back yourself, my friend. All right, so let's get on to some setups, shall we? So here we go. This is Aussie dollar penetrating beneath most of all of the support levels. Here was another one blasted through. This is the target, I can only assume, as it is left unchecked. You can see that you barely got to it. You did not close below it. But this is today. You have not put a wick through it, essentially. Now, with the spread, 15 pips, can this be considered as a valid run on stops? Yes, it can. Because with that spread, these candles are calculated on the midpoint of all brokerages. Or let me rephrase that. Of most brokerages, they calculate the candles by the midpoint. So you could already have an invisible wick that you do not see down, and then 15 pips from the low would put you roughly about there. So is that a good enough push lower to stop anybody out that had their stops setting below this wick? Absolutely. So now that you had a massive run on stops to the downside, this candle, that candle, this candle, that candle, you are looking for a support hold. So you will need to wait on a bounce. If you are short on this asset, you need to wait for a bounce, a pretty big bounce. Here is your last daily support. Let's get this target off the table, as I'm almost 100% positive. Has been doing this for as long as I have. Anybody that had a stop right there is now done. So this will probably take a little bit of time tonight and into tomorrow to chop up all those orders, and then you can look for pushes to the upside. Do not look for short side setups tonight or tomorrow, please. This thing needs to pull back a little bit. This was a very extended run. You had 1, 2, 3, 4 big bearish days on the Aussie dollar, thanks to the incoming dollar strength that we have gotten. So we will wait for a pullback. This is going to be the first level to watch, as it is 75,804. None of this candle was tested in this move to the downside. None of Friday's candle was tested in its move to the downside, and so on and so forth, all the way up to this support level. Since this was the last support of near-term price, you broke beneath it. That wick there, let me spread it out so you guys can see. This wick is a valid test. It did not test the actual close of this bearish candle, but it tested close enough. That was enough for, with the volatility, continuation to the downside. Now a better test is probably I'm looking for a better test. So we will move or wait until this thing moves up. I am short on one account on the pound yen. So if it keeps going lower, obviously I will keep taking profits. But a pullback is needed if you are looking for short side setups. Let's go back to the pound yen, or the Aussie yen, excuse me. I am short on the Aussie yen, not the pound yen. If I said pound yen, apologies. This is what I was looking for to break on the Aussie yen. This is why I got short. I had no idea the FOMC meeting was going to cause so much volatility. So you can see it was a beautiful short play, right? Beautiful short. Basically, when you have an ascending wedge and you get a daily close below, you can look for retests into the ascending trend line as well as daily support. And oftentimes, not always, but oftentimes, it will give you a phenomenal entry to the short side. As long as you don't close the daily back above that level, that's a good spot to look for short side setups. Had you done that, you made a fantastic trade. Fantastic entry, fantastic trade. So now you must wait for this thing to find resistance. This swing low may find resistance. It may, right there, 83 spot 196. These are just going to be main levels to watch. This one is where it is found support, so don't just short a retest of this area as you've already retested it. If you go into an hourly, you retested it on the open of the Forex market. So we're looking for 83 196 and higher. We can look for 83 946 as well. Anybody that got short on this area of consolidation, their stops are setting just above that bullish candle's wick high. So there's going to be stops to run there. All of these candles were straight down, right? So you can look for price to retest some of these areas. Let's see, the next spot that I like on an hourly would be the midpoint of this bearish candle right there. Just roughly middle of that candle. Let's see if it pulls up anything close. My computer is running a little bit slow. There's a wick low right there. So yeah, maybe in that area. That area once again is roughly 83.883. Let's put one on the midpoint of that beast right there. 83.966. For the week incoming, these two areas are areas to watch first. That doesn't mean blindly set out a limit order, sell there, because you could get ran over. But if you see an hourly push up into it and a failure, and then a nice big red candle to the downside, look to short retests of that candle. Let price show you that it is breaking down. Because let's go to the dollar and I'll show you why. So we know the dollar is bearish. Overall, long term is extremely bearish. It's been moving to the downside for a solid year. All right, last quarter we had a bounce to the upside. That end of that quarter, the beginning of this quarter that we are currently in, you see nothing but a one-sided direction back down to the quarterly open. All right, that's your quarterly open. Also yearly open, as there's December, right? There's January. So this section of price is the yearly open for the dollar. You came back down, tested it, you are moving higher. So am I bullish